Hello students, we're at chapter 9 now, and it's probably one of my favorite chapters of this course, and that's because budgeting is such an integral part of an accountant's or finance business person's work that they will do. Each company that you work for should be doing a budget, and of course the more complicated the business that you're working for, the more complicated the budget will become. You also, as an individual, should be using a budget for your personal finances. I highly recommend doing that if you're not already. So with this chapter, the material that comes with my accounting lab is fairly complete as far as videos go, except with the exception of objective number 4. So I wanted to go over a particular problem related to objective number 4, and we'll work through the solution together. Okay, so the problem that we're going to look at is E953B, and that is on page 554 in your textbook. So this would be the time for you to pause your video and read through all of the material here and the requirement. Okay, so you should have paused your video and should have read through all the material. So based on this, again, we're looking at learning objective number 4. Based on the information here, we are going to prepare the cost of goods sold, inventory, and purchases budget for each of the first 3 quarters of the year. And so of course that's for a 9-month period. So the information given here, of course, they're telling you what the total sales revenue is for each 3 periods, and they're also telling you how cost of goods sold is calculated, 60% of total sales. And they also tell you that your quarter ending inventory should not fall below $15,000 plus 15% of your cost of goods sold for the following quarter. They also need to give you some additional information in order for you to calculate that cost of goods sold for the ending quarter by telling you that $220,000 is expected in sales for the 4th quarter. And they give you what your beginning, your January ending inventory of $14,000 is here, so that you can use that for your calculations. Okay, so let's go and look at our solution. Let me make this a little larger here. Okay, so first, we can very easily calculate our cost of goods sold for each quarter ended because the problem told us it was 60% of sales, and of course sales was given. So taking our cost of goods sold as 60% of sales is our estimate. And remember, this is a budget, right? So there can be some estimates in here. Gives us what our cost of goods sold number will be for each quarter. Okay? Plus our desired ending inventory. So our cost of goods sold plus our desired ending inventory. That was given as, remember, $15,000 as a bare minimum plus 15% of our next ending quarter cost of goods sold number. So for March 31st, we know it's $15,000 plus 15% of the next quarter cost of goods sold. So 15% of 90,000 plus the bare minimum of 15,000 gives us 28,500. Okay, so we do the same thing for the next quarter. Of course, 75,000 is our 15% times 75,000 plus the 15,000 minimum. And then for the final quarter, remember they gave us the sales number for the next quarter. We're not calculating that quarter, but we do need the sales figures in order to calculate our desired ending inventory. So for this one, it's the 15,000 plus 15% of our next quarter cost of goods sold, which is, if you recall, 60% of the sales. So we were told that it was 220,000 times 60% of that gives us our cost of goods sold number for the final quarter, and 15% of that gives us our number plus of, well, that's what is that, 34,800 minus the 15,000. That tells us it's 19,800 plus the 15,000 gives us the total of 34,800 right here. Okay, then we know what the total inventory required is. Total ending required is what are we selling plus the desired ending inventory. Okay, so in just a moment I'll go through another way of thinking about this, but just remember what is required is going to be what we're selling plus what we want to be required or desired in our ending inventory. So we require inventory of 88,500 for this first quarter and second quarter and third quarter. Okay, so what is our beginning inventory? Okay, so we're going to take the total inventory required less whatever our beginning inventory is to determine what do we need to purchase. Okay, so if we're acquiring 88,500, now remember they gave us our beginning inventory here of 14,000. That was given to us in the problem. So we need to purchase $74,500 in inventory. And then of course with each subsequent quarter here, we know what we need is required for our purchases, for our cost of goods sold and our desired ending inventory. We know what is required, and then we know what our beginning inventory needs to be, 28,500, because that's given here. We calculated that as our desired ending inventory. The desired ending inventory for the prior quarter is our beginning inventory for the next quarter. That tells us the amount that we need to purchase of 87,750. And of course the logic flows here as well. Our ending inventory from June 30th quarter ended is our beginning inventory for September 30th beginning. Okay. If thinking through this, we're thinking through this process kind of backwards, if you will. In Accounting 201, I put this down here just as a reflection back to Accounting 201. We remember beginning inventory plus purchases equals goods available for sale, right? So beginning inventory, right here, plus purchases, so if we say 14,000 is our beginning inventory, plus purchases, and I've put that right down here, so beginning inventory 14,000 plus purchases of 74,500 gives us our inventory required, or goods available for sale, of 88,500. Then remember, whatever is available for sale during the period is either going to be sold and become part of our cost of goods sold, or it's going to be in our ending inventory. So goods available for sale equals ending inventory plus cost of goods sold, right? So that's what it's showing here. Our cost of goods sold, or our total inventory required, is 88,000, which is equal to our ending inventory of 28,500 plus our cost of goods sold of 60,000. So hopefully that thinking through this in the opposite direction will help you kind of clarify some of these numbers and what they mean. That is the end of Chapter 9. I believe the rest of the information that was given in the videos that were as part of My Accounting Lab are sufficient. But as always, if you have any questions, please let me know. Thanks.